Being your own boss. It's amazing, right? You set your own hours, you call the shots, and then tax season hits. If you've ever stared at your tax bill with that pit in your stomach, well, you've come to the right place. Today, we are going to dive into the key tax deductions that can seriously help you keep more of your hard-earned money.
You know the feeling. You've worked your tail off all year, and then you see that final number on your tax return, and you just think, there's no way. It feels like a huge chunk of your income just disappeared into thin air.
I'm willing to bet it does. If you've ever felt that shock, that frustration, you are definitely not alone. It's probably one of the biggest headaches for freelancers and small business owners. But what if I told you there's a better way to handle it?
And that's our whole focus today. The real key to shrinking that tax bill isn't about hiding money or finding some secret loophole. It's simply about understanding the rules and knowing what you can legally write off as a business expense.
Okay, before we get into the nitty-gritty, we have to talk about the IRS's golden rule. You have to remember this phrase, ordinary and necessary. For any expense to be deductible, it has to pass this two-part test. Ordinary just means it's a common expense for someone in your field, and necessary means it's helpful for your business. So, if it checks both of those boxes, you're probably in the clear. All right, first up, let's talk about the places you get work done. I'm talking about your car and your home. These deductions can be incredibly valuable, but they're also some of the most overlooked.
So, if you use your car for your business, you've got a choice to make. You can go with the standard mileage rate, which is super simple. The IRS just gives you a set rate per mile you drive for business. Or you can choose to track everything, gas, oil changes, insurance, all of it, and then deduct the percentage you use the car for business.
So what driving actually counts? Well, here's the thing. Your daily commute from home to your office, that doesn't count. But pretty much everything else does. Driving to meet a client, running to the post office to ship products, heading to a conference, all those little trips add up so fast. You gotta track them.
Now, let's talk home office. The absolute #1 rule you have to know is the exclusive and regular use test. This means the space you claim has to be used only for your business, and you have to use it consistently. It can't be your kitchen table that doubles as the family dinner spot. It has to be a dedicated work area. And just like with your car, you've got two ways to do this. There's a simplified method, which is a really straightforward calculation based on the square footage of your office. Or you can do the regular method, where you figure out the percentage of your home that's used for business and apply that percentage to your actual home expenses, like rent, utilities, you name it. Okay, we've covered where you work. Now let's get into the day-to-day costs of how you work. These are the expenses you're probably paying for all the time, and you'd be surprised how many people forget to deduct them.
All right, take a look at this number, 50%. Any guesses what this might be for? It's a huge one, and it's for an expense that happens all the time in business.
You got it. Business meals. You can generally deduct half the cost of a business meal. The rules are pretty simple. You or an employee has to be there, and the meal can't be over-the-top expensive. So that lunch with a potential client, or that dinner you grab while you're at a business conference. Yep, 50%.
And here we go. Another key number you're going to want to file away. $25. This one comes in handy especially around the holidays or when you just want to say thank you to a client.
So the general rule is you can only deduct up to $25 for business gifts per person each year. But, and this is a great pro tip, that limit doesn't include the extra costs like gift wrapping or shipping. It's these little details in the tax code that can really save you money.
All right, let's move on to the real heavy hitters. These are the big picture deductions that can make a massive dent in your tax bill, but they do require a little more planning.
The Qualified Business Income Deduction, or QBI, is a total game changer for so many self-employed folks. It's for what are called pass-through businesses. Think sole proprietors, LLCs, that kind of thing. Basically, the business income just passes through to your personal tax return. And this deduction could let you write off up to 20% of that income. That's huge!
Now, of course, there are some rules. It gets a little tricky if you're in a specified service business, like a doctor, lawyer, consultant. Your eligibility for the full deduction really depends on your income. As you can see here, if your taxable income falls below these levels, you're in a great spot to take full advantage of this amazing deduction.
Whoa, look at that number. Now that's not income. That is the potential amount you could sock away in a special type of retirement account in just 1 year and lower your tax bill while you do it. And that's the whole point. Putting money into a retirement plan like a SEP IRA or a solo 401k is just a total win-win. Every single dollar you contribute is a dollar you get to deduct from your income this year. And at the same time, you're building a nest egg for your future. It's seriously one of the best tax strategies there is.
Okay, we've gone over some really powerful deductions. But you know what? None of it means a thing if you can't prove it. So our final section is maybe the most important of all, keeping good records.
The IRS doesn't mess around. They want to see adequate records. That just means you need a system. Whether you use a fancy app or just a simple notebook, you need to log your expenses when they happen, keep the proof like receipts and bank statements, and hang on to everything for at least 3 years. Trust me, consistency is your best friend here.
So, now that we've walked through all of this, I have a question for you. What's the one deduction you're going to make sure you don't miss this year? Are you finally going to claim that home office? Start tracking your mileage? Or maybe even open up that solo 401k? Just picking one of these can make a real difference. Thanks for tuning in, and I wish you a much, much less stressful tax season.